Let's bring in Scott Bauer of Prosper Trading Academy, the CEO over there. Great to have you with us, Scott. And you know, the S&P 500, you can technically make the case with the RSI and hitting to the bottom of the range that yes, you're going to see a bounce. But when you take a look at the put-call ratio, you look at the skew index super low, you look at the fact that the VIX is coming back down into the middle of the range, it seems like maybe we do get a little bit of a bounce off of today. What do you think?
Yeah, I do think that the option paper that we're seeing, Abigail, kind of lends itself towards that. Again, I'm not suggesting a massive rebound, but maybe just some stabilization here. And when you look at volatility, look at the VIX, look at the VIXN, they've risen, but not as sharply as one might think, given the sell-off and the backdrop that we have of this bear market. They both approached, serious levels of resistance, have not broken through. But the option paper flow, something that stood out to me yesterday big time. Typically in the VIX options, we see more calls trading than puts, which is similar to in the SPX or in one of the other indices where you see more puts trading than calls. But in the VIX, you typically see more calls than puts. Yesterday, it was about 2-to-1, Abigail, put to call. That doesn't happen very often. That, to me, was a sign that, again, there's some stabilization out here, and the fear that retail is feeling out there maybe isn't as big as what the market is showing.
Well, I think a lot of investors and traders out there will certainly take stabilization given the big declines in April. And Romain was just talking about that 3-day slide into today on the NASDAQ 100, down 10%, the worst since March of 2020. That VIX chart that we were just looking at, what really stands out, longer term, it may call for some massive spike higher. But more recently, in recent weeks, we are looking at a series of lower highs back down into the range. So if we were to see today's bounce develop into something, what are you targeting on the S&P 500 or the NASDAQ 100?
Yeah, I think we could easily see a 3 to 5% bounce in both of those if we stabilize here. Again, I'm not suggesting that's going to happen, but if we start seeing the VIX continue down here, break 30 on the downside, maybe get to even where it was a couple weeks ago in the mid-20s, I think that suggests a good 3 to 5% upside for the S&P and the NASDAQ.
Yeah, that's pretty interesting, and I would say that chart makes a pretty strong case for 20. And, this year and in recent, I guess over probably the last 6 to 9 months, it's really been these periods of risk on, risk off. Maybe some this dip buying will continue. We'll see. Let's talk about how you play this through the QQQs. And I think it looks like a little bit of a cautious options trade to me, more defense to collect money, but correct me if I'm wrong.
No, it absolutely is. And with option premiums very expensive, I want to be collecting premium right now. I always want to do it completely risk defined. So what I'm doing is in the QQQs, I'm selling both a call spread and a put spread that expire at the end of this week on Friday. So I'm selling to the downside the 293, 290 put spread. On the upside, I'm selling the 310, 313 call spread. $3 wide on each side. I can collect about $1.50. That's also my risk if there's a big blowout either way. But listen, this is 3 days here, and even though we've had a lot of volatility and a lot of chop back and forth, we pretty much have consolidated. So I'm looking, even in the face with the CPI report tomorrow morning, I'm looking still for some consolidation here in the triple Qs to the end of the week.
Well, Scott, that's Friday the 13th. I went to Colgate. 13's a lucky number. Maybe that'll be a good trade for you, and your trades are typically stellar. Thanks so much for joining us, Scott Bauer of Prosper Trading Academy, and from New York.